So it always comes down to this. Are you ready to pass the exam? Are you ready to pass the Series 7? That's the question. Can you pass it? Are you ready? Do you know enough to pass? And a lot of times you can take a test, you do Kaplan or STC or Achievable. You can pass, but you're like, are you memorizing answers? So I'm going to do to you what my wife did to me, not that thing, a long, long time ago. When I first was studying, she took the paper, it was unprinted at the time. She would read me the question, would not give me the four choices, and make me have to explain it to her in word format so she could find the answer in what I told her. So much harder, but it really let me know that I was ready to take the test. So you don't need to get all of these right, but you need to be able to have a conversation about all of these. Every one of these things you should have an idea, and at least most of them, 80 to 90% of them, you should be able to have a conversation and just explain it. Because not having the answers is so much harder. And if you can do it that way, you're going to be ready. Because I have a lot of people that come at me and go, oh, they give me a question, they go, give me four choices. If you need four choices to answer a question, you don't know it well enough. So let's get into it. Now, I'm going to keep pausing this. What you're going to do is see the question, maybe hit pause, answer it out loud, talk among people, talk to other people about it, maybe do it in your study group, then come back and answer it and see how you know it. I'm not giving you the answers. Remember that. There's no answers on this. You have to figure out the answers. Look them up, ChatGPT, Google, your thing, whatever it is. You must be comfortable enough to answer these. Here we go. What does capacity on a trade comp firm tell the client? When would you mark an order unsolicited, and why does that matter? How does T+1 impact? What is T+1? What things are T+1, what aren't? What are the different types of settlement? What rights do common shareholders have? What does a stabilizing bid try to prevent in a new issue? Why do place a buy stop versus a buy limit? Why do option premiums jump when volatility rises? Why are municipal bonds usually a poor fit? Why do they not work inside an IRA? What does duration tell you about a bond? When is a revenue bond unsuitable for conservative income? Who bears risk in a firm commitment versus best efforts? How is a customer's IPO purchase different from a secondary market buy? What does forward pricing mean for mutual funds? How does a short straddle make money, and where's the danger? Where's the risks? What does due diligence do before taking on a penny stock order? What due diligence do you do before taking a penny stock order from a tip? That's unsolicited. What is selling away? Just explain it. How do open-end and closed-end funds differ on liquidity and pricing? Why to buy a convertible bond despite a lower coupon? Why are you buying it even though it's a lower coupon? What happens to open orders on the ex-dividend date? Which ones get affected? Why do long, low coupons move more than rates change? What's my saying for that? What must you check before recommending a variable annuity? How does a protective call help someone short stock? What are the real risks of borrowing on margin? What do you got to tell them? What must a new account profile capture before you can recommend anything? Open this up, talk about this shit. Why is selling dividends misleading? Why is it wrong? Why is frequent trading in Class A mutual funds a problem? What is it called? How does posting a limit order help market transparency? How do you do a GO versus revenue bonds and what backs it? What's wrong with risk-free income in an ad? Why do ETFs realize fewer capital gains than many mutual funds, kind of thing? These are all conversations, open-ended questions, baby. What's the difference in a sector fund, balanced fund, diversified fund? When a company buys back all their bonds, calls them back, what risks do you have? What do you want from a credit call spread? What do you want? What does SIPC protect and what does it not protect? What happens when open orders? What happened to open orders when a customer dies? What do you do first? What are the steps? What's an ADR and why the hell do I use it? How about this? REITs versus real estate limited partnerships. Give me that shit. Hit me with that crap. Which option structure short-term bullish speculation with limited capital? In other words, what options would be good for short-term speculation without putting up a lot of money? Why do companies call back their shares? And what does that do to earnings per share? How is a UIT different from a mutual fund on a day-to-day basis? How can an investor create leverage if he doesn't want to use margin? If he does, how other ways can they get leverage? Explain the bid-ask spread. Act like I'm a brand new person. After a stock dividend, what happens to total value? Tell me what kind of person will want a high-yield bond and one who shouldn't get a high-yield bond. What issuance path lets an issuer raise capital quickly when markets are open? Why do clients park cash in money market funds? And what's the risk? What's the good stuff? What's the bad stuff? Tell me about emerging growth companies. Also, tell me about emerging markets. Two different things. Emerging markets versus emerging growth. Let's go, baby. We got more. So we're a little bit, almost halfway through. How we doing? Are you be able to answer most of them? I'm not saying you should be able to answer all of them, but you should be able to have at least a working understanding of almost everything I said. So if rates jump, which is hit harder, a premium or a discount bond? Say they're the same maturity. Why would a high net worth investor buy munis? Maybe why would they buy a muni over a muni fund? If you build a debit put spread, what do you want to happen? What does short against a box mean? Is it okay? Is it not okay? If you have a buy limit order and the price touched it, but you didn't execute, why would that happen? Why could you have a limit order that touches your price and not execute? What do stop orders do? Why do they help in a choppy market? What does it mean by time of trade disclosures in munis? What things do you have to disclose at the time of the trade? What's going on? Why do you have to do it, even if they're unsolicited? If you have a single stock position, how do you de-risk it? How do you change it? What risk can you change? Compare a callable preferred, cumulative preferred, participating preferred, convertible. Have a conversation. What's different about a European style index option versus American style? What is a primary market purchase from a client's perspective? What kind of issuer would do a shelf registration, and why would they do that? How can a bond fund value fall even if there's no defaults? How to cover calls at income, and what upside do they do? Do they have more upside, less upside? Why did you cover calls? If a customer comes to you and says they want no principal risk and they want stock-like returns, what are you telling them? What are you telling them? Is it possible? Is it not possible? Whatever. American versus European style. What's the difference? I'm asking it twice, whatever. If you get a rumor from an employee of a company, and it sounds like a sure thing, what are you going to do? You sold the straddle and volatility spikes. What happens to your profit and loss? What does an in-the-money option mean? What does out of the money mean? If it's in the money, what's going to move? What's the delta? Oh, that's a tough one. You might not get that. But what's the delta on in the money option? So what's churning? Explain it what it is. How do you find it? Have you ever heard of a road show? What is it for? Who can't go? Stuff like that. If a client texts you trade instructions, what's the right way to handle it? How do price, coupon, credit, maturity interact to set a bond yield? How does convertible preferred behave when the common goes up? How does it behave when the common goes down? If you short a call, how do you cover it? Are there more than one way? Is there more than one way to cover a short call? Why do we ladder bonds? What does a ladder do? What does it not do? What is a laddered portfolio? How about give me some examples where you have to refuse a customer order? Most of the time you can't, but there are situations where you do. Why is a market order risky in a thin small cap? After a forward split, what changes to per share metrics, but not value? What changes? What goes up? What goes down? Rates fall. Who benefits more? Long duration or short duration? A client calls you up and says, hey, just pick something hot. How do you react? What do you do? What can you do? What can't you do? What do you need to be able to do that? That's a lot of shit going on. What is an options collar? Can you explain it? What is a good? What is a bad? How do you do break evens? What's the max risk, max loss? If I want to act like I'm investing in the S&P 500, what other ways can I do it without a mutual fund? If I don't want a mutual fund, what other products can I do that would mimic the S&P 500 or any index? What's a high yield fund? How do you explain that to a conservative client? You have a 529 that's kind of all equity with 2 years away. What do you change? When you open a margin account for someone, what do you have to give them? What do you have to explain to them? All of the docs, what do they have to sign? What do they not have to sign? What would give you a synthetic long position? What would give you a synthetic short position? Why the hell do I do synthetics? When would I be subject to a maintenance call? What the hell is it? What happens? If I want to compare a muni to a corporate, how do I do tax equivalent yield or taxable yield? How do I do it? What are the risks to a stop limit order versus a stop order? What are some of the red flags to watch out for when you deal with old people? When do you have to send account statements? How often? If there's activity or not activity, when do you have to send that shit out? Or penny stocks, what's the frequency? What are the 3 phases of anti-money laundering? When's the easiest way to catch it? You get a complaint. How do you handle it? Written or not, how do you handle the 2 different ones? Explain a wash sale and how it affects. What does it do? Does it knock away your loss forever? Is it only for a time? Whatever it is. After a wash sale, how is basis going forward? What changes? And what is a wash sale? Explain it like a normal person. So I'm not saying you need to know everything I just talked about, but you should be able to get most of them, not be like, I've never heard those words before. Like the delta, maybe you're not have to worry about it, but some of the stuff, you got to know this shit, okay? So if you're taking it, comment here, comment on here, the stuff that you're not sure about. I'll try to answer it. If not, check me out every Tuesday night, 8 p.m. Eastern on the Tube of You. I talk about it. And if you want to bring them up and ask the questions, we'll have a conversation. Let's fucking go, baby. You're going to pass this.